a sustainable investment society, we need to invest in the real economy. And in the real economy, sustainability challenges, sustainability topics, they count. And a sustainable investment company, by offering sustainable investment funds, we want to evaluate companies on how they address these sustainability challenges and how they face these social concerns and how they face the real world. And we want companies to pay attention on social issues, on human rights issues, on ecological issues. And by evaluating them, we offer the client, we offer the investor the opportunity to invest only in these companies which pay in an optimal way respect to corporate social responsibility. And from that point of view, by offering SRI, by creating SRI products, we force companies to pay respect to them from a completely different point of view. As an investor, we target investor relations. We use the capitalistic instrument by far, the trade in stocks. And we only are going to invest in these equities, in these companies, which pay attention to that corporate social responsibility. And by doing this, we influence the companies because we are transparent. We say to the companies, if you obey these rules set up by our external advisory board, if you obey these rules, we can take position in your company. If you don't obey these rules, we cannot take positions in your company. And that is crucial. And by offering SRI products in this transparent way, we really have a lever to stimulate companies paying attention to corporate social responsibility.
Money doesn't talk, sustainable money doesn't talk too. How do you communicate with the companies you're investing in?
Indeed, that money doesn't talk, but investors talk and stakeholders talk. And by being transparent, by publishing the research, by publishing on our website the individual scores of the companies, and explain to the company and to the investor why a company is admitted or why a company is excluded, it becomes a reputational issue. The company knows if the company is admitted, the investor knows, and we start a dialogue from that point of view, or we can create a dialogue. The companies know to which topics they need to pay attention to, and the investor, he knows what are the exclusion and the selection criteria the SRI fund manager imposes to the company. And this transparency instrument, this disclosure, is actually the most crucial element in the entire SRI world. If we want to influence companies, we need to communicate with companies, and disclosure of the results is actually the key cornerstone of our proposition.
Are the companies interested in this sort of communication?
Well, here size does matter again. As long as the SRI community, as they don't represent many assets under management, companies, they can neglect it. But actually, what we see is we translate the concerns of the different stakeholders, the clients, the neighborhood, community, government, shareholders. We represent the actual relevant claims these stakeholders make towards the company. And we only want to invest in the companies which pay in an optimum way respect to these claims. And by doing so, we represent actually the voice of the other stakeholders which already addresses companies. So actually what we do is the same as what the environmental committees are doing, what the employees are doing, what the shareholders are doing, what the clients and the consumers are doing. We want that the companies maintain a balance between the financial claims, between the ecological claims, between the financial claims made by the companies and these claims made by the employees, the clients, the consumers, the authorities, the neighborhood.
Are there examples of efforts after these communications and that companies change what they're doing?
Well, actually, we had already some good examples of companies which directly contacted us and asked us why are we not admitted in your SRI funds, and we explained them how we work, what is the inventory of the criteria, what on which topics do we evaluate companies, and they already asked us what can we do to improve our score, and what can we do, what examples can we learn from our competitors, from the other companies. And this best-in-class approach actually gives a stimulus to continuous improvement, to continuous improving of the different efforts companies can pay towards these stakeholders. And that actually is a very interesting evolution we see.
If you wouldn't do so, if you only had stocks in your funds, you think there would be an effort in sustainability in the companies?
Of course. But companies will not only pay attention towards corporate social responsibility because we ask so. We ask because our advisory board of academics decides that these are the relevant issues a company has to take care of. So a company has to do it from their own conviction. And we try to measure in which way is a company in a real way concerned about how they behave towards these stakeholders. And as an investor, we are only one of the stakeholders, but by offering SRI products, we also integrate the claims made by the community, by the neighbors, by the future generations, for instance. Or future generations, they are a stakeholder we integrate in our methodology.
Okay, so there's a sort of money talking for sustainability?
There is money talking for sustainability, and transparency is actually the crucial element in this.
Okay. Mr. Heuninck, thank you very much.
You're welcome.